Welcome to the Capital Call podcast, where we discuss capital, labor, and technology, the main drivers of the global economy. I'm your host, Vijar Kohli, co-founder of Golden Door, an investment firm based in Newark, New Jersey. We hope you enjoyed today's topic as we expand on the ideas of capitalism and economics. In this episode, we discuss the upcoming decline that will be happening in the economy this April, the stock market turmoil that took place at the end of quarter one, what's on my mind for the macroeconomic factors taking place across the U.S. and the globe, and how businesses can take advantage of the $2 trillion stimulus plan when it comes to loans and grants across the nation today. The economy is heading downwards and fast. The last day of the first quarter ended flat, but don't let this fool you. Don't mistake this as a correction. Pension funds were rebalancing portfolios into equities because zero interest rate environments and fixed income securities are not attractive investments. As an individual, this is not the time to rebalance. You need to become defensive, and the bottom is unclear, and you do not want to catch a falling knife. There are three factors investors are missing today. One, the duration and severity of the current crisis. We don't know how bad the corona crisis really is. Two, how long will it take for the SBA to disperse funds from its two new programs? Small businesses are in need. We have record unemployment, almost 10 million jobless claims, and money is needed extremely fast. And number three, the time to restart businesses and close the crisis chapter could take 6 to 12 months. So when everything settles down, everything won't be fine. People will not start shopping as if it was January, February before the coronavirus became a big macro impact. You need to understand this is a global shock, and liquidity problems will soon become solvency issues very quickly for many businesses. The post-crisis landscape will look very different from January 2020. Today, many companies have taken out record debt issuance for cash just to buffer against loss in revenue in March. This will reduce future earnings powers and creditworthiness for all companies. Anyone that had a liquidity and solvency issue yesterday will be downgraded. So there are three characteristics of a struggling company that you can observe today. They will have one, insignificant cash reserves, two, negative cash flows, and three, maturing debt very soon. So that is a recipe for disaster. My recommendation is to not do any portfolio rebalancing and try to not pick the bottom. Be resilient and dollar cost average your cash into investments over the next 6 months, and you will come out ahead. The U.S. economy will be frozen for the rest of April. This week, we hit 6 million jobless claims, double last week's historic record of 3.2 million. Unfortunately, unemployment will continue to rise in April. Worldwide M&A has dropped 28% in March, and new deals and funding will be postponed until further notice, especially when you can't meet in person. The least covered topic in the macroeconomic scale is oil. Crude oil inventory is building up sharply and will reduce the price abruptly as demand remains non-existent. There are discussions happening in the administration today with Putin and the Saudis, but I would not be betting that things will get better anytime soon. If you are a long-term investor, I advise you to monitor the essential businesses open today. These are the only types of companies you want to have in your portfolio going forward. If a business has closed its doors during this crisis, sell a stock. This is a pandemic and businesses are being challenged. Long-term profits come from businesses that can withstand headwinds and will come out stronger from this crisis. So look at consumer staples, healthcare, not consumer discretionary, energy, or hospitality. You want to find companies that are going to come out better not weaker from this crisis. There is very little money available to millions of small businesses across America. Small businesses provide over 60% of jobs across the country, and these are mostly hourly workers. So the government has come together to design two major programs that were released in the last 2 weeks. First, the SBA Disaster Relief Program, and two, the Paycheck Protection Program. Both are designed to provide quick funding for businesses to stabilize with enough working capital to get back on their feet. Closing your business is one thing, but restarting it is a whole other problem. And most companies don't have enough in cash reserves to one, wait out 3-4 months, two, to restart their business from scratch. The application can be confusing and it's a lot to take in, especially the Paycheck Program, which opens up today, April 3rd, and will be available on a first-come, first-served basis. The NJEDA actually has also released 7 new programs, its own small business emergency grant program, along with several other loans to help small businesses, but not at the same scale. We ourselves have helped several small businesses apply for the appropriate funding applications since last week. If you know anyone that needs help, feel free to reach out to me today. And also, if you get a chance, check out my LinkedIn article on how to get started on these COVID-19 loan programs today. Use this downtime to become more computer savvy. We ourselves are doubling down on social media. We are producing more content on a weekly basis than we ever have before. Why? There's not enough transactional business happening at the current moment, and we don't want to fall behind on the curve. The quarantine may have changed the work environment, but it doesn't mean we should stop working, especially if it gives us a chance to improve ourselves, improve our brand, and our marketing efforts. Unfortunately, no one is making buying decisions until the market stabilizes. So this is the best time to produce this type of educational content and just connect with everyone digitally. Everybody's on LinkedIn, Facebook, Instagram, and Twitter. So this week we launched the Financier YouTube channel. I've just been posting different commentary videos of what CNBC, Bloomberg, and other news channels have been producing, small clips that I repost on LinkedIn. And then you already have been listening to the Capital Call podcast, which is an audio version of our written newsletter since December. And Apple approval is coming, so we'll be posting more often when we become available on more podcast channels. If you enjoyed this episode, please subscribe and share it with a friend. We're always looking for feedback, so leave a review. You can also find me on Twitter or LinkedIn at Vijarkoli on all platforms. And as always, thank you for listening.